Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 19th of August 2022. I'm recording the video nearly 7 PM Eastern Standard Time, so we have final data for the close of the week. Both Elliott Wave counts are the same. I expect a pullback or consolidation as either a B wave or, for the bullish count, a second wave correction. When it's done, more upward movement. If it's a B wave, it's going to be difficult to analyse. That's usually how B waves work. This is the preferred Elliott Wave count. It is bearish. Elliott Wave is fractal. You have to fit the weekly chart into the monthly chart. You have to fit the supercycle degree B and C wave into grand supercycle degree 1 degree higher. I link back at the start of each analysis to previous monthly charts, so if you haven't already viewed those, click through and go and view those, and this will then make more sense. Grand Supercycle 4 is expected to be an expanded flat correction. Within the expanded flat, here is the end of wave B and the start of wave C. Supercycle wave C may only subdivide as a 5-wave motive structure, which will be labelled at cycle degree 1, 2, 3, 4, 5. 1 subdivides as a leading expanding diagonal, which is a 5-wave motive structure. There are only 2 structures for supercycle C, either an impulse or an ending diagonal, and an ending diagonal requires all the subwaves at cycle degree to be zigzags. If this is not a zigzag, then that eliminates the possibility of an ending diagonal for supercycle C, leaving an impulse, which is a more common structure and thankfully a lot easier to analyse. And so cycle wave 1 looks like a leading expanding diagonal. Cycle 2, a very, very deep correction, subdividing perfectly as a zigzag. Second waves following first wave leading diagonals are normally very deep, so this follows a normal pattern. Cycle wave 3 may only subdivide as an impulse, and my target for it is to reach 2.618, the length of cycle wave 1. At 1037, I'm using that Fibonacci ratio considering the depth of cycle 2. Within the impulse of cycle 3, a very clear 5 down is now complete for primary 1. Now we need to see an obvious 3 up complete for primary 2, which may reach the resistance at the 0.618 Fibonacci ratio of primary 1 at 1919.03. Primary 2 may not move beyond the start of 1 above 2065.89. Primary 2 may subdivide as one of many different Elliott Wave corrective structures. It only can't be a triangle as its sole corrective structure. It would most likely be a single or multiple zigzag. It could also be a flat or a combination. I'll label it as a zigzag unless it shows otherwise, and I may need to use alternate wave counts in coming weeks. So far, intermediate A could be complete, intermediate B may move a bit lower. Let's take a look at this at the daily chart level, the low of primary wave 1. This point down here, from this low to this high, intermediate A could be complete. Now I may also need to move the degree of labelling within primary 2 in coming weeks. This could just be minor wave 1 within an impulse for intermediate A. We'll have to work with alternate wave counts in coming weeks. You've got to be more flexible when a correction is subdividing. If this degree of labelling is complete, then intermediate A may be a complete 5-wave structure. Intermediate B may be continuing a little bit lower as a zigzag, but I'll probably will need to relabel this as it continues. B waves can subdivide as any one of more than 23 possible corrective structures, if you can count all the different kinds of combinations and triangles in there. And so when B waves unfold, it's absolutely essential that your analysis is quite flexible, and in coming weeks I'm probably going to have to work with alternate wave counts for this B wave and alternate ideas for this second wave. B waves exhibit the greatest variety in structure and price behaviour. They are really difficult to analyse. If my analysis of A as a 5-wave structure is complete, then B may not move beyond the start of A below 1681.43. And I've checked the subdivisions at the hourly chart level. This 5th wave looks like a really nice ending contracting diagonal. At the weekly chart level, this is the bullish wave count. It considers Grand Supercycle 4 over in December 2015, and there Supercycle Wave 1 to start the next secular bull market began. Within Supercycle 1, cycle waves 1, 2 and 3 are complete, 3 over up here, 4 possibly also complete as a combination, and 5 in its early stages. The target is for 5 to reach equality in length with 3 at 2587. 3 was a long extension. If 5 was to only reach equality in length with 1, it would be truncated, so I'm using the next ratio in the sequence and expecting both 3 and 5 to be extended. That's pretty common for commodities. Along the way up, this wave count requires a new high above 2065.89 for confidence. Within cycle 5, no second wave correction may move beyond its start below 1681.43. Let's take a look at how it may be beginning from this low down here. This point down here, again I'm seeing this upward movement as a 5-wave impulse. The subdivisions are the same for both wave counts and possibly a zigzag to continue lower. A reasonable expectation for the zigzag to end may be the 0.618 Fibonacci ratio of the 5 up it's correcting at 1728.72. Minor wave 2 may not move beyond the start of 1 below 1681.43. Classic analysis. How's it looking this week for gold? A strong downward week completes a wide range week, a bearish engulfing candlestick pattern, but it has weak volume compared to this candlestick pattern here, which had push from volume, and this one here, which also had push from volume. This one's a lot weaker. That fits the idea possibly of a B wave or maybe even a second wave, so that fits both Elliott wave counts. There's strong support at 1675. I'd expect that to hold for a while yet. On balance, volume has a weak range at the weekly chart level. There's no signal. ADX is declining, indicating no clear trend after just catching up with that previous downward trend. RSI neutral territory, as is money flow index, which just reached oversold at the last low. Stochastics also neutral and ATR flat as prices overall lower. At the daily chart level, a bearish engulfing candlestick pattern here does have a little bit of push from volume, and now prices moving lower with weak and declining overall declining volume and declining range. So there's quite a bit of weakness in this downward movement that absolutely fits a B wave. So this fits, or also a second wave, fits both Elliott wave counts. Here's a very weak signal from on balance volume. This trend line has quite a bit of a slope, hasn't been tested for a while, so a break below this support is a really weak bearish signal. I'll expect a little bit more downward movement possibly to resolve that. ADX is declining, there's no clear trend. RSI and money flow index both neutral. Stochastics entering oversold. I should update that. That should say entering oversold. And we've been over ATR. So there's quite a bit of weakness in this downward movement. It's not as impressive as that weekly candlestick suggests, and this fits the Elliott wave counts this week. That's all from me with your gold analysis. I hope everyone's looking forward to a fabulous weekend.